Did you know there's a way to generate tax-free income from your home without selling it, without taking on debt, and without touching a home equity release plan? It's completely legal, simple to set up, and could give you a steady stream of extra cash in retirement. Yet most people never take advantage of it. If you're a homeowner in the UK, you might be sitting on one of the most overlooked income opportunities available: renting out a room under the government's rent-a-room scheme. This allows you to earn up to £7,500 per year, completely tax-free. That's £625 a month, money that could cover your bills, fund your holidays, or even help you delay dipping into your pension. And here's the kicker: you don't need to be a landlord. You don't need a buy-to-let mortgage, and you don't have to deal with the complexity of equity release plans that lock you into lifelong contracts. But before you rush to list a spare bedroom, there are key details, rules, and potential pitfalls to be aware of. Let's break it all down so you can make an informed decision and unlock a powerful retirement income stream without the risks that come with traditional equity release. How the rent-a-room scheme works. The UK government introduced the rent-a-room scheme to encourage homeowners to open up spare rooms and help ease the housing crisis. In return, you get a generous tax break. Under this scheme, you can earn up to £7,500 per year tax-free from renting out a furnished room in your home. That means if you charge a lodger £500 a month, you'll make £6,000 a year, all of it tax-free. If you charge £625 a month, you'll hit the full £7,500 allowance, still without paying a single penny in tax. And here's where it gets even better. This tax-free allowance applies per property, not per person. So if you're a couple and you both own the home together, the allowance is split, meaning each of you can earn up to £3,750 tax-free. If you earn more than the £7,500 threshold, you have two choices. One, opt into the scheme and keep the £7,500 tax-free, but pay tax on anything above that. 2. Opt out of the scheme and declare all rental income, but deduct allowable expenses such as maintenance, insurance, and utility costs. For most retirees looking for simple, hassle-free income, staying within the £7,500 limit is the easiest way to maximise tax efficiency. Who can qualify for the rent-a-room scheme? To be eligible, you must own or rent a home in the UK. Yes, even some tenants can sublet with permission from their landlord. Offer a furnished room. It can't be an empty space. Share communal areas like the kitchen or bathroom with the lodger. Use the property as your main residence, so second homes and buy-to-let properties don't qualify. Why this beats home equity release? If you've been considering an equity release plan to unlock cash from your home, here's why renting a room could be the smarter move. No interest or debt. With equity release, you're borrowing against your home, and the debt compounds over time. With the rent-a-room scheme, you're simply earning money, not borrowing it. You keep full ownership. Equity release reduces the value of your estate and can limit what you leave behind for your family. Renting a room, your home remains 100% yours. Immediate, flexible income. Once you bring in a lodger, you start earning money right away, without waiting on complex legal processes or financial agreements. You can stop anytime. If you decide later that you don't want a lodger anymore, you can simply stop renting the room. With equity release, once the contract is signed, there's no going back. Finding the right lodger. Now, the thought of bringing a stranger into your home might seem daunting, but with the right approach, you can find a lodger who fits your lifestyle and makes the process stress-free. Here's how to do it safely and efficiently. 1. Advertise in the right places. Use trusted platforms like spareroom.co.uk, OpenRent, or even word-of-mouth recommendations from friends and family. 2. Screen applicants thoroughly. Always meet potential lodgers in person, ask for references, and conduct background checks if necessary. 3. Set house rules up front. Clearly outline expectations regarding visitors, noise levels, shared responsibilities, and rent payment terms. 4. Use a lodger agreement. This isn't legally required, but having a written agreement can help prevent misunderstandings. You can find free templates online. 5. Protect yourself with a deposit. Asking for a deposit, typically 1 month's rent, ensures your lodger is serious and provides a safety net for any potential damages. Common concerns and how to address them. What if I don't get along with my lodger? You can end the arrangement with reasonable notice, usually 1 month, unless you've agreed otherwise in your lodger agreement. Will this affect my council tax or benefits? If you live alone and receive this single-person council tax discount, you may lose it. However, your total rental income will likely offset this small increase. If you receive pension credit or other means-tested benefits, the additional income could impact your eligibility, so it's worth checking with an advisor. Do I need to declare my income? If you stay under £7,500 a year, no declaration is needed. The tax exemption is automatic. If you exceed it, you'll need to file a self-assessment tax return. Real-life example, how Linda supplemented her retirement. Linda, a 67-year-old retiree from Manchester, was struggling to stretch her pension. She considered equity release, but was worried about losing control of her home. Instead, she decided to rent out her spare bedroom for £600 a month. Over the past year, she's earned £7,200 tax-free, allowing her to cover her energy bills, enjoy occasional weekend trips, and even put some money aside for unexpected expenses. The best part? She still owns her home outright and hasn't had to take on any financial risks. Final thoughts. For homeowners looking to generate extra retirement without debt, without risk, and without giving up control, the rent-a-room scheme is one of the most powerful yet underused financial tools available. It offers a simple, tax-free way to make the most of your home while staying financially independent. And unlike equity release, which can reduce your long-term wealth, this strategy puts money in your pocket today while keeping your options open for the future. If you found this useful, imagine what else you might be missing out on when it comes to protecting your financial future. Make sure to stay informed. Your home is your most valuable asset, and the decisions you make today will shape your retirement for years to come. This content is for educational purposes only. Mentioning any financial strategies or schemes is not an endorsement. Always consult a certified financial professional for personalized guidance.